late, though not very late. Huh? Today was quite hectic, but I believe we should be able to get an idea or two on how we should be able to pick a few marks on partnership accounts and advocates accounts. I believe you are able to see my screen.
Yes.
Yes.
Okay. Now, with regards to partnerships, and I believe by now you already know what partnerships are, and of course the types of partnerships, which I'm not going to delve into that. And what I would go to is straight to the an introduction to the partnership accounts. And usually there is an agreement. This agreement spells out a number of things. One of the things spelled out in that agreement would be the objective of that partnership. But for purposes of accounting, you would be having the profit sharing ratios, you would be having the capital ratios, you would be having salaries. If there's a partner who is managing that particular enterprise, then they would be entitled to be paid salaries. Of course, where there is no such agreement, then it is normally assumed that the profits and the losses would be shared equally. There would be no interest on capital. Again, there would be no interest on drawing, and that salaries would also not be paid. About four things that we need to take very keen interest on. When you bring in your capital, we are three partners: Linda, Nyamolo, Wendy, everybody bringing the capital so that we are able to start the partnership. We might not be able to bring the same amount. Maybe somebody brought 1 million, another one 1.2, another one 1.7. So interest on capital is normally given, at least so that the person who has brought so much money doesn't come again and start crying that, oh, why again are we sharing profit like this, yet I've given so much money. That much money that you've given, we will agree that we'll give you interest on your capital. We talked of drawings, and Linda brought it very clearly that there was the drawings in terms of money and in terms of goods. And so for this particular one, the drawings in terms of money used has the effect of reducing your capital. So then what would happen is an interest would be charged on that drawing to discourage people from drawing, because if you draw too much, then you might also end up being insolvent, as the case may be. Of course, salaries, you will see a partner who is going to be paid some salaries. And at the end of, after we've determined our net profit, it is usually adjusted, and we will see how that is adjusted. And after that, the distribution of that profit, which we normally call the profit, loss, and appropriation account, that is for purposes of mute. Well, partnerships also prepare their books of account, but there are two major accounts: the current account and the capital account. If you look at that question 3 that we had agreed that we are going to use as our guide or working, you'll see there is the capital account for this guy called Frame, and then there is French. Then they have their current accounts. The current account basically would record what is owing to the partner or what that particular partner is owed, and that has a reducing effect. In serious questions, you'll have to do the workings. The working on the income, profit, loss, and appropriation account are not very difficult. But when you come to the balance sheet, you will have to make all the entries in that current account and the capital account so that you have your final figures for your capital. It takes time, and you are not being trained to be practitioners, but to understand, we have accounting practitioners who are then given that. But for purposes of examination, you will just need to know how you can compete with your time and get as much marks as you are able from a question. The capital account records the capital that have been brought. Of course, the current accounts are normally closed at the end into that a particular capital account. If you look at the format, you will realize that in the current account, you will have the balances that have been brought down on the credit side. You will also put interest on capital on that credit side. Your share of profit, you will also have on that side, credit side. Your salaries will be on that credit side. Those are your entitlements. So the things that are going to reduce your entitlements are the drawings, the money that you took away, and of course, interest on drawings. Understanding where to put those 5 elements, and if you put them properly on your current account, then even if you don't balance it off, but those correct entries on those current accounts and the capital accounts will give you some marks. However, if you feel competent enough, then you can compete with it. But I would not encourage you because you are competing with time. If I'm doing my accounts, I have 3 months to have my books balanced. And so the reality on the ground is we need to know if you've understood what interest on capital is, how you have your share of profits, the salaries, the drawings, and interest on drawings. We've said interest of drawings is just to discourage you. A number of other activities also happen on partnership accounts. I think what we are expected to do is just the basic partnership accounts. In partnerships, you'll find new partners being admitted, old partners retiring, changes in the partnership agreements being made. If you are sharing profits at the ratio of 2 to 1, and now we feel like, okay, we need to make a change, then at that point, then we'll have to close our goodwill, get a realization account where we are taking all our assets, then the values that have been sold are taken there, and all those amounts are then closed. I don't think that that is within our province at this point. And even if it were, at this point, some of you might be having that information and some might not be having. So I would choose to go the majority way so that people understand. If there are any other hard questions that needs to be done, then that one we shall be able to do it towards the end, just to show that we've also understood it. But for our purposes, it's the basic partnership. Of course, when partnerships are being dissolved, there is a rule in Ghana versus Murray. A partner may be insolvent, and so that being the case, that loss would then be shared by the other partners in their capital ratios. Sharing of the profits and losses is done in the appropriation account. I just somebody mute. I just put something there on the treatment of those elements that I mentioned. Wherever you see partners' salaries, of course, profit for the year would be a debit. When you check it to the appropriation account, it would be a credit. The partners' salaries will be debited because it is an expense, and you credit the partner's current account. The interest on capital, you will debit the appropriation account and you credit the partner's current account. Interest on drawing, you will debit the partner's current accounts because it's reducing their entitlements, and you credit your appropriation account. Of course, the residual profit that is shared, you will be able to see that. Interest on loan from partners, income statement, because it is an expense that we are paying. Loans made by partners, that one is also an element that you will see in any question. So all these things that you are seeing here are scenarios that you are likely to find in a question. At this point, you don't need to panic. Just listen, because after listening, you're able to go through the question and you will be able to understand. Now, to the question that we are having, I would request that somebody reads for us very quickly. Just unmute and do your thing if you have the question paper. Are we there? If we don't have, for purposes of saving time,
I'll allow me to read it. It
please
is
do.
question 3, yeah?
Yes.
Okay. So we are being told that Frame and French are in partnership sharing profits and losses in the ratio of 3:2. The following trial balance relates to their business as at 30th September 2013. So we have their buildings, which were the cost was 210 million. On the debit side, it's now at 160 million. You have their fixtures at cost at 8,200. You have the provision for depreciation for the fixtures at 4,200. You have the accounts reconciliation at 61,400, accounts payable credit 26,590, cash at bank debit 6130, inventory as at 30th of September 2012. So that should be the opening. Yeah, the opening stock is 62,740 debit. You have the sales at 363,111, purchases 210,000, carriage inwards 3410, discount allowed 620, loan interest to Prince 600 and no, 3,900, office expenses 4160, salaries and wages 57,809, bad debts 1632, allowance for doubtful debts 1,400. And then we have a loan from Prince of 65,000. Capital contribution by Frame is 100,000. By French is 75,000. And then we have the partner's current accounts, yeah. So Frames is 4,100 credit. French's is 1,200 credit. And then finally, we have the drawings, and the drawings by Frame debit is 31,800, French is debit 28,200. They balance at 640,601. So for the additional information, information number one is the closing inventory was 74,210,000. And then the expenses to be accrued are office expenses at 2.115 million and wages at 720,000. And then we are supposed to depreciate fixtures at 15% on a reducing balance basis. And then the buildings ought to depreciate by 5 million. The fourth one is we are supposed to reduce our provision for doubtful debts to, well, that
1250.
is, okay, to 12.
1250.
Yeah, to 1250. And then our partnership salary of 30 million to Frame has not yet been entered. And then the interest on drawings is for Frame 900,000, for French 600,000. And finally, the interest on their capital contribution is 5% per annum. So we're supposed to draft an income statement and a balance sheet as at 30th September 2013. 15 marks.
Well, so then, unless you're a genius, I would advise that you don't start your question before adjusting for that additional information. You might think it will take you time, but it is at the point of adjusting for the additional information that you ask yourself that one, I have an inventory that I was given. The question I'd shared, it is question 3. We did question 2, and this is now question 3 of the CLE 2015, LPM, November. So the first thing, inventory at 30th September, that is basically closing inventory. Expenses that were accrued, you are supposed to look at your expenses. What is your figure of expenses? We are told it is 4160, but you accrued 2115. What I was talking about truncation, if you look at the top here, our figures are in 00. You look at your expenses in that particular question paper, you will see it is 4160. That is 4.160, 4,160,000. Whatever is accrued, you are given in full 2,115,000. So if you have to work them, then you must decide whether you're going to work with the full figures or truncation. For my case, I would make a choice to adjust it as that. I'm just showing my working as 2115 plus 4160, which will give you 6275. Salaries and wages on record, you have 57,809. We accrued 720. So our new salaries and wages figures will be that. I'm just showing you my workings. The reduction in provision, I'd explained that, and I will, what we are having in the trial balance is how much? 1,400 is what we had recognized. So we are reducing it to 1,250. A decrease in provision, we had said that it's going to be a gain. So you're going to see how we are going to adjust it in your income statement. Partnership salary not entered already, meaning it is not in the TB. So we are going to charge it, and it is also going to be accrued. The interest on drawings has already been calculated for you. That is very easy. You just pick the figures directly. If I wanted to make your work difficult, I would tell you, I'll give you the drawings, and then I tell you that interest is charged at 5% so that you calculate for yourself. That is another way that you would find the question coming. Interest on capital is not calculated, you are expected to calculate. That is 5% of the 100,000 by frame, and 5% on the 75,000 that has been brought by French. Are we seeing those capital accounts on page 4 of 6? So then, once you've completed your workings, then I remember Linda gave us the format yesterday. Our cells, according to the question, they are somewhere after the inventory at 30th September 2012. We are given as 363,111,000. If we had sales return or returns inwards, we would deduct. In our question, we don't have any, and so then our sales remain at 361, 363, 111. We less our cost of sales or cost of goods sold, which starts by our opening inventory. The opening inventory, you find it on the trial balance. Inventory on at 30th September 2012. That is 62,740. You add your purchases, which are 210 million. You will less the drawings as had been indicated to you yesterday. If they are goods that jamaa alichukua kama anaenda kulala njaa akachukua, you would less it from that. Those are drawings. Then returns outwards, anything that was returned. And then, because we don't have them, our purchases would be the 210. But we had carriage inwards, the cost that we used to bring our inventory to our premises, we add it. And so we have our goods available for sale. And that because of the goods available for sale, we less the closing inventory, which you are normally given at the point of additional notes. So that closing inventory is 74,210,000, giving us 201 as our cost of goods sold or cost of sales. That 201,940,000 we less from our sales, and we get a gross profit of 161,171,000. This must be very rich people. So we said that income would then be adjusted for other income. And I would encourage you to use the format as given by Linda. That one you are supposed to master, just like your civil procedure rules or your criminal procedure rules. That is the format. Once you have the format, then you post the figures that your question has given you. We don't have discount receipt. If we had, we would have put it there and it would have adjusted our profits. We have our note 4, which tells us that provisions are being reduced to 1,250,000, but we had recognized 1.4 in the trial balance. That is a reduction. A reduction, we said, is treated as a gain, and that is why we've used it to adjust there. So our total income adjusted by that 150 being 1,400 less 1,250, you would be having it in your working if you did the working. Then we less our expenses. Depreciation. We talked of depreciation being calculated using two methods, straight line or reducing balance method. But you're also told that the key thing is to understand how it is being calculated. For our case, under note 3, the examiner tells us that for fixtures, we are going to use 15% on reducing balance basis, but you've already given the annual depreciation for the building, as 5 million. So you don't need to calculate it. The examiner has given you that figure. And I told you, examination questions are like skits or what you call scripts. When you start hearing a skit being narrated, then if you are circumspect enough, then you know how the story is going to end. So then, for furniture and fixtures, depreciation will just pick that amount they've already calculated for us. For fixtures and fitting, we've been given it as 8,000 to 8,200,000. The provision is given as 4,200,000. If you less that, you get your net book value, which Linda and team did yesterday very well on. So you have your net book value of 4,000, and that 4,000, we take 15% of it, and that gives us a depreciation charge of 600. Discount allowed, oh, that is something that we're just picking directly from our books. Loan interest, that is the loan to Prince. Prince gave us a loan of 65,000, and the interest charge is 3,900. If I were an examiner and I wanted to confuse you, then I will let you calculate the loan to Prince. Prince is not a partner. So I will let you calculate it so that you confuse yourself. As you are calculating the interest on capital for French and Frem, you also mix it with Prince so that you mix your figures. And when you mix your figures, the examiner will be happy to score you less. So it is you to get into this with a very clear mind. Don't panic. Very clear mind. Whatever you are able to get. Whatever you did not get, you are not a practitioner, but you will learn. At least you have an idea. So the loan interest is there. Office expenses, we've already calculated that. We are told it was accrued. So when it is accrued, part of it will be charged, the total will be charged as an expense, and the other one will go to your accruals or your liabilities. So even before you go to your balance sheet, that is the thinking that you are supposed to be having. If it is a prepayment, once you recognize what is due for this period, then the other one that is prepaid goes to your balance sheet because it belongs to the other period. And those are marks, those are points that you get. Salaries and wages, that is also adjusted. Bad debts written off, that is also in our trial balance. So you note that our total expenses are 76 million 566. So if you less from your total or rather adjusted income, you less that 76, you have a net profit or loss. If it were in bracket, it would be a loss, but we have a net profit of 84.7 million. This, then we go to, from that point where we have recognized our net profit then this table comes into play. The profit for the year. At that point, then we take it to the appropriation account where we are going to adjust for the partner's salaries, the interest on capital, interest of drawings, the interest paid on loans, and all that. Those adjustments are done in the appropriation account. I would go for the substance of a form, get how those adjustments are being done. From our net profit of 84, we are going to adjust it with interest on drawings. Interest on drawings is a gain to the business. Somebody took money, we charged him interest, that interest came for the business, it is a gain. In the current account, it reduces the partner's entitlement. So for purposes of adjusting our profits in the appropriation account, interest on drawing is a gain. Interest on capital is also adjusted, and this is an expense to the business. Linda, Nyamolo, Wendy gave us capital. For us to ensure that Linda doesn't complain that he brought a lot of money, or Wendy doesn't complain that he brought a lot of money, and we are sharing the profits equally, we will give him interest on their capital. For the business, it's an interest, it's an expense. We are paying for that. That is why we are adjusting it as a negative. So because Linda also does so much work for the farm, when Nyamolo and Wendy are outside there, Linda makes sure that everything is being done. Then we pay her a salary of 30 million. So you need to understand the items that we use to adjust the net profit in the appropriation account. The moment you understand them and you bring them like that, then you will find that our profit before sharing would be 47. That is the 84. You've added 1.5, which is interest on capital, interest on drawings. You've lessened the expenditure referred to as interest on capital. You've also deducted what we've paid our partner, Linda, for helping us run this venture. So then we realize that the profit that is available for us to share is 47,515,000. And our profit sharing ratio is 3:5. That is for Frame, he will take 3/5 of that profit, and French, he will take 2/5 of that profit. If you calculate, then Frame gets 28,509,000, while French gets 19,006,000. Whatever is being appropriated, here must be able to add up to that 47, the profit that is available for sharing, to the extent that that appropriation account closes what started as an income statement. It showed you your profits, then you adjusted for the gains from the partners, and it finally ends to be 0, 0. I would take you back to that table where we were talking of you are debiting the appropriation account and crediting the partner's current account. This table the residual profit is what we've just seen. And there's nobody who tells you that you must make a profit. You can make a loss, sababu biashara ni kupata, saa zingine inaumana. So our appropriation account, from what we've just seen, we have debited it with the shares. So if we had our partner's current accounts, then that amount would be credited to the partner's current account. To show you a loss, and you would credit the appropriation account, would not to the partner's current account today for purposes of doing, but will take you to that partner's current account if lender gives me another 1 hours next time, so that properly. So if you go to your balance sheet, the rest of the adjustments and the figures from your trial balance, they will fall squarely on your balance sheet, save for the figures for the capital accounts and the current account, if any. So the rest of the items will be posted to your balance sheet the normal way. The format that Linda had given you, I would wish that we post all these other things, all these balance sheet items on that format of the balance sheet that was given. Now that we've worked up to the appropriation, then my next class on partnerships will now be showing you the working on the current and the capital account. For the reason that if I introduce them at this point, I'm suspecting that we would be constipated and we might even lose the good knowledge that we've gathered. I will also combine it with something that I will do in advocate's accounts. So up to that point, I will restrict my questions to the income account and of course the appropriation account. Any question before I go for the next? Linda, help me see the hands. Any question on that?
Amulundu.
Hi, Nyamolo. I just have a question on, could you please scroll down to, or is it up to the place that shows the profits? Yes,
Yeah.
that one. No, the
Yes.
profit before sharing.
Yes. There.
Yeah, I can see you've indicated for frame 3/5, for French 2/5. Where have you gotten that fraction from? I didn't get that part.
Question 3 starts that Frame and French are in partnership, sharing profits and losses in the ratio of 3:5. It's actually at the beginning of the question.
Oh, okay, sorry, I missed that. Okay, thanks.
So the ratios will always be given, and that is why we'd had started with this. In most of your questions, we are assuming that the partnership agreement is there. So then that is why they are agreeing that the profit sharing ratio is going to be 3:2. In the event where there is no agreement, or if you are not told, if the question is silent on the profit sharing ratio, then you will assume the issues on point number 2, that profits and losses are shared equally, that there is no interest on capital, there's no interest on drawing, and there's no interest on salaries. And because that would be so easy, examiners want to jog your mind a little bit. We will give you the one that has that so that you work it out. I don't know why examiners wouldn't want you to go the easy way, but hiyo kazi itakuwa ni kwako sasa kujua vile una calculate. So I'm really encouraging us not to cram, but to understand. Because the question can be twisted. Just the same way, I think that was Michelle, has asked about where we are getting the ratio. What if you get a question tomorrow where you're not given the ratio? What do? You assume they are sharing equally. And you assume there's no interest interest on capital. And there are no salaries for partners. And there are no interest on drawings. So these guys, you'll just go straight and appropriate that 84,765,000 equally. That would be the variation of that question. However, because these guys want to test the concept, if you understand what interest on drawings means and their effect on that capital, what interest on capital means and their effect on that profit, and the salaries that are paid to a partner on their effect on the profit, whether they are reducing or increasing the profit, then a question would be set like that. I hope I'm clear on that.
Yes, you're very clear. Thank you.
Yes. Any other question? Then otherwise I take us through to the advocates accounts. I still have deni ya kuwork on the current and capital account. I've told you to try with these figures. We have all our workings except the capital accounts. Let's use that format that Chiri gave us, and we try to post these figures and see if they will balance, so that our next class then we will be looking at something that people have worked on, and the only figures that we are going to insert for that thing to balance are the working on the capital and the current account. The reasons why I'm not going to introduce it at this point is, if I introduce it at this point, then we are going to lose. For those already who are aware of that, that is them. But there are people, and many of us are not aware. So if I introduce it now, then I'm going to lose so many of us. So for that reason, once we've comprehended this, then we will go and prepare that balance sheet. I think those are valid reasons and they are reasonable, so that we also attempt. I will not restrict you from attempting and even working on that capital and current account, because then we will be discussing. It would be a discussion. And if we have any variations of questions, then they will come in there. And I believe that would be a proper conclusion of partnership accounts. So far, you have more than half the marks if you are able to post these workings into that balance sheet. So then, if there's no question, I would introduce the advocate accounts. Part of
Nyamulo,
it, yes.
just a minute. I am seeing a question on the chat on an explanation on what the accounts reconciliation is in the trial balance.
Account reconciliation, I think that is just accounts receivable. That might have just been a typo. When you see accounts payable, then the other sister is accounts receivables. Accounts receivables are our debtors or our trade debtors, what we expect to receive from those people that we sold to on credit. These guys also make mistakes, and that is why you are crossing. There's a question that I was looking at. In fact, you can try and add that trial balance. Just take a calculator, add the figures that we've been given there, and see if they're adding to 640, 601. The balancing, hata sielewi wanalemewa. So usijifanye gwiji, get your marks and run away. You are running for your life. There is a question that One of my good friends, Konyango, one time told that it called Jazanda or something. And he was telling us about a hunter and his hunting dog. Wanafukuza sungura. So the sungura gets into a bush, the dog gets into the bush too, and comes out without the sungura. So the owner of the dog asks the dog, "Why have you not brought the sungura?" So the sungura and the dog were running different races. The sungura is running a race for its life, while the hunter's race is for food. So I once again reiterate that is not to be taken to mean that these things are not supposed to balance. No, accounts must be balanced. But for purposes of exam, you are competing against time. So pick what you can pick and go. So that account reconciliation, it could be a reconciliation of the debtors. If it is not an error, then it means after we have reconciled our debtors, of course, there is a control account that is normally used. And of course, that control account just ensures that you don't miss out on anything. And those control accounts eventually become zero. So within that meaning of the control accounts being an account used for reconciliation, then you talk of account reconciliation. But we also have creditors control account. So then that leaves me only with the option that it is a payable. I think I was clear on that. What is like a suspense account, Linda? That question?
I assume perhaps Mbithi, you'd like to use your mic. If not, please unmute.
Yeah, it is important that you ask so that no, it's not account reconciliation. Uh, suspense account suspense account is created. I'm just trying to see if I have a trial balance. Look at that question 3. The trial balance is balancing at 640,601. If my addition serve me right, and I will have to recompute it again. Lender also helped me recompute it again. I don't remember that, or maybe I missed a figure, but that trial balance, I think I missed some 600 on the debit side. So the debit side was less than the credit side. So the suspense account, which I believe our team will deal with, would be that balance, that difference that is not making the trial balance to balance is what we take to the suspense account. Once we've put it into the suspense account, then we are starting the process of tracing the causes of that difference in the trial balance. So your trial balance is not agreeing, that balance is picked and put into the suspense account. So from the suspense account, you start investigating. And if you're going to look at the errors, there are some 3 errors. I don't want to divulge into that. When time comes, you will be able to see them that affect the balancing of the trial balance. So in all those details that you'll be given, you will have to fish for those 3 errors and the factors that would make you discover the cause or the reason why your trial balance is not balancing. Your trial balance is the first point of testing the accounting equation. Am I clear on this? And I believe I've answered you. Tuko pamoja? Correct. Now, I will stop. Okay, let me just go through this. Then I'll explain something on this. Then I'll go to a question that I'd also shared in our previous class. Which will be the question that we are going to review today on advocates' accounts. As an advocate, you will be required to have your accounts maintained. And there are requirements as to that. There's the Advocates Act, and of course, there is also the Advocates Deposit Interest Rules. Of course, the Advocates Accountant Certificate rules that require you to present a certificate from an accountant that tells us that the books of account as prepared the advocates represents the true and fair view, that they are fairly stated. That is a legal requirement under the advocates accountant certificate rules. Of course, there is the issue of the advocates deposit interest rules that regulate that the advocate is not liable by virtue of the relations for any client and any interest earned on that money. That you can read for yourself and understand. My concern would then be the transactions that an advocate will have to undertake. The first thing, the accounts that these advocates are going to prepare, they will also do their income statements and a balance sheet. And for the income statement, for the normal businesses, we were talking of sales. Sales represent what the income that we've gotten from sales. For the advocate, it would be the fees, or rather the fee income that you've gotten from your clients. And that fee income must be computed. And it will be computed through a formula, which I've seen here. When you go into that question, you will see fees income. You are supposed to take that fee income, you add the closing work in progress. And work in progress, we are saying that these are things like the pending cases at the close of your financial year, the cases yet to be concluded. Then you less your opening work in progress, and the figure that you get would be your fees. Of course, as I'd said, when you get that question, don't start. These details, the closing work in progress, you will find it under additional information. The opening work in progress, you'll find it in the body of that trial balance. The concept is almost the same. However, the only thing that you will see here is that the other transaction that you are likely to get, you will be told that we received money on behalf of clients. Maybe Linda wants to buy an apartment in Kilimani, so she would deposit the 300 million to our account. That money is, we're holding it for the client. Then we may also make payments on behalf of clients. Linda has just deposited 300 million in our account. The seller requires a 10% deposit. We will make that payment from Linda's resources because Linda has sufficient funds. Suppose Linda gave us 50 million and these guys require a deposit of 70 million. We would make a payment. We can make payment partly with Linda's payment and our 20 to make it 70. Alternatively, if Linda doesn't have the 70 million in her account, then we will pay. And of course, Linda will have to reimburse us. So those are two scenarios of the payments that the question will tell you. So you will have to think through that. There are fees charged. That would be maybe our professional fees, all those other things. Then you will also see cash that has been received from clients. It may be that they are paying you your fees, or from your disbursements that you have done on them, they are now reimbursing you. They are paying you back what you'd paid on their behalf. You will also see that a client authorized you to transfer. Remember that transfer from your professional ethics, you are not supposed to intermeddle with that client's account. But if a client tells you to transfer 600 from their account, it can be 600 from their account to pay for your fees or to purchase for them a building. Of course, then we will also record office expenses. In that question, you will see transactions number 1 to 7, but there will also be office expenses which are on the trial balance. So if you miss any of the entries from 1 to 7, bado kuna matumaini. Matumaini in that you are able to still adjust the office expenses and post them correctly. Matumaini ya kwamba bado you will be able to compute the income fees, and I believe there are marks for identifying that, and you will be okay. So having said that, I will stop sharing this, and then I share the question that was together with our example that we did in the previous class, so that we are able to go through that. And still, no reason to panic because kuna nuru gizani. Kuna nuru gizani. Are we seeing my screen?
Yes, we are.
That is the question that we did. And this is a possible question that you might get, and I will be reading it. Briefly explain the following terms as used in accounts for professional practitioners. For this particular question, the office account, the client account, cost charged to client, and work in progress. Hiyo ukipata, that should be free marks. The office account, client account, cost charged to clients, we'll see the solution. So then part B, which is what we are interested in, that given below is a trial balance extracted from the books of Kamau Nyambati, a firm of practicing advocates, as at 31st of October 2001. Capital account 204,000. Disbursements on behalf of clients. We said you can be paying on behalf of clients. That is an asset. Drawings. By now, if you know drawings, you already know where that adjustment is going to come. Salaries, rent and rates, printing and stationery, postage. You can see that my capital is on the credit, that are the rare side, while these others are on the debit. Cost charged to clients is a credit. From there, we should already be knowing what is this thing they are calling cost charged to clients. Work in progress, November 1st, 2001. Then there's money held on behalf of clients, 24,800. We are crediting it because it is a liability to you. Unaweza ambiwa ulipe pesa ya wenyewe anytime. So then the debtors I've highlighted because I think there's an adjustment on that. Sundry expenses, furniture fitting and library, cash at bank, whatever you are holding for your clients. That figure, you will see it twice. You recognize it as an asset in your books, but again, for the clients, it is a liability. So in the trial balance, you will be able to see it also there. For your office account, there's that 55. So this trial balance balances at 506,000. Then additional information. The incomplete work as at 31st of October was valued at 23,500. I think we've talked about this, and now we must be a friend of that. It's the closing. It is estimated that debts amounting to 5,500 are uncollectible and are to be written off. Depreciation should be provided at 20% per annum on the book value of the furniture, fitting, and library books. We know what book value is as at now. So you can see a pattern. You are told to prepare an income statement, balance sheet for partnerships, for advocates. The format is more or less the same, apart from a few changes. And that is why I said the most important is then to know how to make these adjustments. If we are not adjusting or using the closing stock to calculate something, we are adjusting debtors. If we are not adjusting debtors, we are adjusting depreciation. And you will find them. You will find them. You will find them. That one you can text to the bank. You will find them. And when you find them after you've passed, then my whiskey can flow, not coming in the bottles, flowing. I'll put a drip for that case because I do partake. So required the profits and loss for that particular year and the balance sheet. And I told you for the additional information, let's do the workings. So the office account is basically an account that records professional receipts and expenditures. The client account receipts ni ile tumepokea kama fees, expenditures kama zile payments tumewafanyia. The client account records amounts that a professional owes or is owed by the client. This account is still maintained by us advocates. Haiko kwa client. Kama niko na client sahihi ambao ni the class G, you are all my clients. So I would be maintaining the client account for the 230. So in that client account, to the credit is my liabilities. What I owe you. Hiyo pesa yote mumeleta niwanunulie nayo manyumba ama niwakalkuletie tax. Naweka hapo. Kama kuna yenye ina owe, kampuni iliwalipia, then it will reduce your claim on us. So then the debit side. So it's important to note that the office account iko na debit na credit, client account also debit and credit, and those debits and credit has columns for office and client, office and client. So don't confuse yourself. Those accounts, I will also deal with them the day that I'm handling the current accounts because they are related. Understanding one will lead to the understanding of the other. Understanding what we have done today will also lead to the understanding of this for purposes of our LPM. Costs charged to clients are professional fees charged to a client on services rendered. So if you see cost to clients up there, a good student would think that they are the sales, but here we don't refer to them as sales. We refer to them as cost charged to clients, but we use the cost charged to clients to get our fee income that we now go and put in our income statement. So this we are going to use to work for our fees, because it is from that fees that we are going to deduct our expenses to arrive at a profit or a loss. Work in progress, we've said. Our workings, show your workings. Unaweza kuwa umekosa kama saa moja for a wrong posting that you picked wrongly due to pressure ya exam, na malaika alete upako kwa the marker, then they remember that this one mark, I can fetch it from the working, even though he has not put the correct figure for the debtors in the balance sheet. He's picked 78, but his working for the new data was 72. You never know. So that is why I say your workings shown might be your savior. So we said that depreciation, the working, we've done there. So I worked my fees income in the income statement. And for us to be able to get our fees, it is the cost charged to clients. Don't worry about that table. I was doing them very quickly so that I don't disappoint you and defer this class. So we'll start by charges to clients. Then we will add our closing work in progress, which we have put there. Then we less our work in progress, which is in the trial balance. So our total fees would be 236. Ordinarily, I should have done this working under the working, then the fees of 236. The gist is how to know how to calculate the have that income. Then you can now bring your expenses, salaries. You're just picking directly rent, printing and stationery, postage, the bad debts that you are told that 5,000 of them are going to be written off. It's a net. Your depreciation, total expenses 200 and 800, and you end up with your net profit of 28,500. Somebody is asking about opening and closing work in progress. We've said that work in progress is the value of incomplete work at the reporting period. Kuna kesi tutakuwa tumepewa ziko kotini, zina run, zimekuja in this year. Remember we had said that you report for this particular income period. So kuna kazi ambazo by the time tukienda hewani, reporting for purposes of the financials had not been completed. For purposes of exams, The opening will be on the TB, and the closing would be on the additional notes. Why do you need them? You need them to compute your fee income when you are preparing your income statement. And so you identify your cost charged to clients. For this question, it is loosely, it would be an equivalent of your sales, loosely translated. So don't say that Nyamolo said, I said loosely translated. Otherwise, you're supposed to call it cost charged to clients. I'm just making it simpler so that we know. So those three figures, the marks that you get here from your 250 to your income fees of 236 is not the same as the marks that you're going to get for posting these individuals. The marks are heavier. If it is a tick for identify that cost, 2, 3, 4, you would get maybe 4 marks, depending on the question. If it is question 1 or 2, then this other one, the one that you adjusted, you will get a mark for adjusting and posting correctly. So then I hope I've answered that. I'm running on 2 machines. That is why if I turn left, I'm able to see the question. Then I clarify. For the statement of financial position, that is also the balance sheet. The balance sheet, P&L, for now, you might not be condemned if you use it, but as practitioners, they mean the same. Statement of financial positions, they would mean the same. Of course, others would call it income, comprehensive income statement. If you look at Safaricom set of financial statements, you'll get that. For these purposes, I think what is key is posting. So our non-current assets, if depreciation was charged, then you will pick it and put that figure there. Our current assets, there's a work in progress, which is an asset. You bring it under current assets, and that is the closing one, the 23. Then we had the debtors that we had adjusted. We were told that we had 78, but 5,500 were not going to work. The disbursements that we made for these clients, they're supposed to pay us. They're like our debtors. Cash at the bank for the clients is 24,000. I mentioned it, that you'll see it in the trial balance there, and you'll also see it here. So your total current assets 188,500. Your current assets plus non-current assets gives you 224. You guys lost me, eh?
Yes.
A bit, yes.
Yes. But is my screen still there? I'm still in the office. I was using some Wi-Fi, but Kenya paraffin lamps and the candles decided that steamer goes, so Wi-Fi went off, so I had to tether. So are you still seeing my screen?
Yes,
Yes,
we
we
can
are
see it
still
clearly.
seeing it.
Ah, good. So now even if it goes my screen, I'll still be using my bundles to get this concluded. Capital, we were given. But then there was that cousin of it called drawings. So you will adjust your capital using the drawings. Drawings reduce your capital. Then retained earnings. Our retained earnings are our profit for the year. Profit for the year tunapata wapi? Kwa income statement 28,500. That is called owner's equity. So we are bringing it here 28. So 52 plus 172,500, 224,500. So our asset indeed would be equal to our capital or our liabilities plus those capitals. So that accounting equation is done. So this is direct. The next question that I'm going to do, the last one that I will be doing, then like Melissa, I would have discharged my burden. Only that for me, you can always find me and consult. Not to say that you cannot find Melissa, but you can always find me. I think then for today, that would be good for us to digest. Clearly, you are seeing that when you are given a trial balance, then there are marks that you can pick directly. The next two questions that I'm going to do are going to be a variant of what we have done. So it is important that we get this. So that as we get into the difficult one, a variation of this, then we should be able to get the maximum. If it is a 10 questions mark, you will be having no reason of not getting 5, 7, if not 10. If it is a 20 question marks, I don't see why you should not get 15, 17, or 20. Unasindikiza na hizo za theory, then we are home and dry. Tuanze kutengeneza pesa hapo nje. At least I'll be your accounting partner and lender and everybody. Somebody is asking about the client's liability. Remember we said in our definition here that the client account records the amounts that a professional owes or is owed by the client. We are keeping money for and on behalf of the clients. It is a liability to us. The question that I would ask is, who are we that are preparing these accounts? It's not the client. It is us, the advocates. But we are maintaining accounts for our transactions and for transactions of the clients. When I draw the T accounts for the clients, then those facts that I've given you today would become clearer because I would visit them. If I were to introduce that T account today and the T account for the capital and the current accounts for partnerships, then you would lose 80% of your content. And that means the free or the easy marks to pick will be missed. Being competent in this area and my desire that you pick as much marks as possible, I chose to first of all win you on these mashed potatoes and bananas, for lack of a better word. Then the next time we can now chew githeri or omena, that is dry fried. I hope I've answered you. And in the event that there is no question, that document would be shared. This had already been shared. Then I can clear what is on my desk within the next 30 minutes. Then I can find my way home. One of the things on my desk is our financial statements. The audit has reviewed and there are adjustments that are there are things that were noted, and now I'm responding to that. The result would be that audit certificate that we had mentioned under the rules. I think that gives you the whole picture, 360. So the next time we are going to do one complicated question, which I will share in advance. Then we will work on how it is posted together with what you've been given. I think we will be home and dry. Linda, any question that you're seeing for clarification?
I do not have a hand, so I assume we are okay. Yeah.
Anybody
there's
to
no-
give feedback? Because you know I've been a mwalimu before, so naweza kuwa ninang'ang'ana. A teacher is assessed by how much the students have retained or have understood. Michelle Amulundu Acharo, so far, can you give us feedback? And Obama, you will also give us so that we are gender sensitive. Barack, Michelle
I
first, then Obama.
Okay. As for me, I'm grateful because I think the mode of delivery is good, and especially the way you're dragging everything. Like you're talking slowly, so at least you're able to understand. I think that's important, and yeah, I'm liking the whole uh, revision with Linda and yourself, and yeah, I'm gaining a lot and I appreciate. I'm sure I'm speaking for many. So thank you. Thank you so much. Yeah.
Thank you. Barack, the man from my county. If Barack is not there, then Bet. Kiama,
Yes, Nyamolo.
tell us something. If we need feedback, so I don't want to be accused of not using gender neutral language. So positive and negative cancels. Help me cancel that.
Awesome. Thank you so much, Senior Nyamolo. We are imbibing knowledge from thy shrine, and we are very helpful because this particular course is was hurriedly done, and the way you people are taking us through the baby steps into the deep waters, we really do appreciate. And of course, you are touching our professional lives in a major way. Thank you so much for going out of your way, and may God bless you and the team. Thank you.
Thank you. Allow me to exit so that I clear my desk.
Thank you.
Thank you. Thank you, everyone. Let's
One of
meet.
my colleagues is laughing that I'm exiting to clear my desk. It's okay. Okay, thank you guys.
Good night, everyone. Let's meet, I think, next week to wind up on this and whatever else is remaining. Good night.
Night.
Good night.
Night.